Good morning, everyone. Welcome to our Monday morning trading room. I'm just looking at the calendar here. I can't believe the month of October is almost over. Hold on a second here. We'll get the screen share going on. Couple more days before the little bandits start coming by begging for candy. That reminds me, I've been dipping into our Halloween supplies. I need to go out and buy a few more. All right, Friday's session here. Let's take a look at the daily chart. It's going to give us a better perspective of what's going on here. It's not a bad idea to reference a longer term chart from time to time. Friday session, you can see some very large ranges, but overall the day was relatively neutral. Again, lots of volume going through, which is to be anticipated on a big ranging day like this. But the fact that the market finished neutral tells me that neither side is really in control here. The other thing that kind of jumps out at me as I'm looking at this is that maybe, just maybe, we are working ourselves into a bit of a sideways channel, or maybe more accurately at this point would be a bit of a wedge. Maybe that's how it's going to shape up. All right, so at the moment, you can see we're opening with a bit of a gap here. The market opening up here, leaving off down here last Friday. So we've got a bit of an upside gap, or pardon me, a gap below the market. We'll see whether or not they try to do something about that. It's still very early, obviously, only a couple of minutes into the day. So we'll give them a chance to get their bearings right now. However, things looking maybe a little bit more bearish. Market topping out here. The overnight highs looking to be somewhere around 69.92. For those of you who like your first in sync signal of the day, I guess it would have been this one right here. A nice little sell signal here off of the hard edge, a green bar sell. And a very nice move lower off that. Easily finding your profit objective. My goodness, your day could be done already, and we're only 4 minutes into the session. You can do that not only with the Eagle, you Raptor traders can also do the same thing. You can look for your first in sync signal. And very often it's going to have a good follow through. Now, by in sync, I mean you want to be with trend. You want to be trading in the same direction as your trading bands. So if your day started with a number 2 signal, well, that's counter trend. I would not consider that to be in sync. All right, getting a couple more signals here. Another number 1 signal. The market's actually a little bit quiet for a Monday, or so it seems. Oh, look at that. That's out of reach for me. The range is a little bit broad. I was thinking about maybe trying to short here, see if the market is establishing some sort of range here this morning. I could get by with that one. So we're getting multiple responses here of around the 69.35 zone. and we are above the market. So here's our primary resistance. Market with maybe a slightly more bullish flavor to it. All right, let's close that up for the moment. I'll try not to do anything silly to start the day here. Hate it when I put myself behind the 8 ball right out of the gate. Okay, yeah, let's see here. Good morning, Antonio. Antonio says, good morning, Eric. I've got the Raptor on the Euro US dollar pair and the British pound US dollar, both with a 40 tick brick. The Raptor settings are Hawk brick size 30. I think what you mean to write there is the second cloud 40 and the first cloud 60. What do you think? Well, I think you've got the standard relationship there, where your Hawk bars are going to be, where are we here? So let's go here to the Raptor. So you want to roughly maintain this relationship that you have between your brick size and your clouds and your Hawk. So yeah, I think you've got it. So if you're running a 40 tick brick, 3/4 of that would be 30 ticks. And then your number 2 brick size for your cloud, that would be the same as your chart size, so that's 40. And then your number 1 brick size for your slower cloud would be 1.5 times, so that would be 60. Yeah, I think you got it, Anthony. Oh, sorry, Antonio. The Raptor programming, we allowed more tweakability, if you will. So you can customize the signals for the market you're trading. The defaults are always the starting point, and the defaults, honestly, they will serve you very well for the vast majority of the markets you are trading. If, however, you were inclined to play with it, you could adjust your settings, and that will either increase the number of signals or reduce the number of signals. But the default settings and the relationships between the components is always the starting point. So let's say for whatever reason I change my chart and I open it up and I'm not happy with the way the signals are printing. Let's say I'm looking at these signals and I'm saying, oh, okay, well, why did that print? That shouldn't have printed. Or I'm not happy that printed, that value printed there. Well, now I can start to play with it. I can start to play with my cloud sizes. I can start to play with my bricks. I can start to change my brick size up here on my chart. As a rule of thumb, if you make your brick size larger and you reduce your other factors, you will reduce the number of signals. In fact, you'll probably eliminate all your counter trend signals, which may not be a bad thing. But no, Antonio, I think you've got a good starting point there. When you got a market like this, though, and you got a bunch of signals printing and you're wondering what's going on, why are we not seeing a lot of follow through? You need to always remember the context that you're trading in, right? Ray Burke always used to like to say, you have to look left to be right. He also liked to say trading the left side of the chart was easy, trading the right side of the chart, not so much. But I think you need to recognize that the potential is here that we are in a rather large sideways trading range. So when you see this kind of thing developing, I think it's important that you trade accordingly. You want to perhaps be a little bit more selective with your signals. I think a second push opportunity is always a great way to test the market to see whether it's really serious about filling your position or not. Very often it will help keep you on the right side of a trade. Okay, so we got a bit of a bottleneck going here this morning as the market moves back and forth. Yeah, Antonio says I tried the smaller brick size, but I think it was too small. I think it is for the euro US dollar pair as well. I think you'll do better with the larger brick size. Antonio's also asking, what is this dotted green line that you have on your Raptor? This is these are the initial balance lines. This is what we call a system add-on. And if you go to the Indicator Warehouse website, well, here, I'll actually do it for you. The initial balance lines, so where are you? So if you go to Indicator Warehouse, you hit your little search up here, you search for initial balance lines. What they do is they allow you to place different lines on your chart. But what I use them for mostly is the opening range. I like highlighting the opening range high and low. Oop. Oh, Adam's after me here for something. Okay, excuse me here a second, folks. Hi, gang. Sorry about that. Um, just had a little 911 with Adam there. It's all good. It's all good. It's just he's a bit of a busy boy now as well, so we got to chat when we can. All right, so we're still bouncing back and forth. While I was talking to Adam, I was watching the market come down here yet one more time, and I honestly considered throwing an order in there again off the second push opportunity. And all the second push means is when you're looking at your chart like this, the market seems to be a little bit constipated. You're producing a number 3 signal. The question is, do I take it or don't I take it? It's a high probability signal after all. Well, two considerations with the number 3 signal in particular is it is a continuation signal. So first off, there needs to be a trend or something resembling a trend to continue. I think we have that, but the fact that we've hit these lows here, you know, 1, 2, 3, 4 times, it just makes it that much more likely that another reversal will come about yet again. So I think a second push would be a great way to approach that one. And that would have kept us out of trouble. And so far we are still moving in this rather tight sideways trading range. All right, while we are waiting for this market to do something, Antonio is asking if I can open up a Euro US pound with his settings. Hold on one moment here. I will do that for you. It does appear to me as though the market may try to get into that opening range gap, but at the moment, we're really sideways. There's just not much going on here right now. with me here a moment. I think the market needs to make a decision here soon. Because it's been relatively sideways since the opening. Okay. One thing that did catch my eye here, though, is we have this little bit of sideways range, and now we are maybe making a breakout higher. I'll elaborate on that in a little bit more, but I would consider this buying opportunity right here. We'll see if there's a bit of a second push opportunity that develops. Okay, there you go. It's a little bit drawn out, but again, given the sideways nature of the market, I don't think this is necessarily a bad way to go today. All right, so we'll just put that aside for now. I wanted to point that out before it got too far away from me. All right, so here's the euro US dollar pair. And I think what's important is you want to make sure you have enough bars on your chart, especially if you're going to be day trading this, so that you get enough signals. So here's the session break line. Let's go back a few days and see how many bars we get within a day. Okay, that's not bad. Normally you want to see it. You want to see it span at least the width of your screen, your monitor. Yeah, okay, so it looks like there's a reasonable amount of activity there. Regarding the quantity of the signals, well, this is always the trade-off with trading, isn't it? In that you may generate fewer signals, but so long as the signals are working out, well, that's really all you're interested in. And I do believe, Antonio, you said you were trading the London session. So this was, I believe, pre-market here. This would have been your first signal. Exceptional follow-through on that. This would have been an early number one signal, and this is going to be something that you're going to learn to recognize, the proper number one signal printing after the clouds are fully crossed, but this signal developing as the clouds are already starting to turn. It's certainly the signals are all working out. This is the only one that gave you a little bit of grief, but it did give you an opportunity to adjust your trade. So let's say you did take it on the hash mark, and let's say initial stops were somewhere here around the hard edge. When the market came down and started going higher and started coming back down again and going higher the second time, you had at least one or two opportunities to adjust your stop. So while, unless you were taking profit on target, while this particular signal did not follow through, at least it gave you the opportunity to minimize your exposure, which is the next best thing. Of course, the rest of the signals all working out very nicely so far. So I would say, you know, if you're content with generating a half a dozen signals in a session, I think that's just fine. Of course, if you want to generate a few more signals, you could cut your values in half, and I think that would give you a number one signal right here. I think it would give you a number one signal right here. This, by the way, these two signals, this one and this one, both the early number one signal. So the clouds starting to cross, not fully crossed in both instances. You get the pullback and then you get the continuation. This one, not a big deal if you were already short off that number two signal. This one, a little bit trickier to catch, but not that much more difficult. Oops. Okay, let's reinstall the Raptor now. Where'd you go? So I think your settings are just fine for a 40 tick chart. While we have this up, let's do a 20 tick chart just so you can see. And you can see what I mean by playing with the values, how it changes the kinds of signals that you're generating. And so we're going to make the fast cloud 20 ticks, we're going to make the slower cloud 30, and we're going to make the hawk bars 15. Essentially half of what all your other values were. Yes, and here we go. So here's that number one signal that I was mentioning. And let's see if we got a number one to sell as well. Yes, we did. So by reducing the values, you do introduce a few more signals. But remember, more is not necessarily better. We're not looking for more signals. Rather, we want to be relatively sure when we get a signal printing that it's something that we can take advantage of. Oh, Antonio's asking, what are the red and green levels here above the chart? This is the logic counter. And I do believe that your system should have loaded with the logic counter. If not, you can email Ben at support@indicatorwarehouse.com. The logic counter, all it does is it forecasts where the bar will finish printing. Right, so it's essentially a measuring tool. So I know if this bar turns lower, it's going to print the low at 69.73 quarter. All right, well, we've gotten a very nice rally. I did hit my profit objective on our number one trade, but my goodness, I think it would have been worthwhile to put a runner in on that one. Look at how the market just took off to the upside. Mark says a nice late filter entry at 7 o'clock my time right here. Yes, sir. That is textbook right there. I think that one developing about the same time as the #1 signal printing on the Raptor. But just tremendous follow through on that trade. Beautiful. Okay, well, there's a couple of trades for the good guys. All right. Well, getting a little bit of a pullback. So I think what we're looking at now is more of a breakout and retest type scenario. It's going to be hard to see because the market has already moved so far, but you can see we have kind of a trading range going on here. And we may be coming back to retest it. So that's what I think I would be looking for right now. Trade forecasts are actually saying we are in scalp mode for a while, about a half an hour. After which we could be moving into trend mode. I think trend mode may have snuck in there a little bit early given that rather large move. Um, Good question here from Mike. Mike asks, so in scalp mode, do you change your target objectives by how much? Okay, first let's discuss how the trade forecaster actually forecasts what the market environment is and what the next one is likely to be. The trade forecaster works in much the same way as the weatherman. Um, so the weather people, the meteorologists, what they do is they look back and they say, oh, the last time the barometric pressure was this, the humidity was that, the cloud formations were like this, the wind speed was that. This is what the weather was. So they look to the past to try to tell you what's going to happen in the future. Trade forecaster works much in the same way. So it actually looks back in the chart. I believe it needs 20 days of data, and it analyzes that data and it says, okay, the last time these market conditions were present, this is what happened. And this is what happened next. So it's always analyzing what's happening now to what happened over the last month. Given that right now it says that we are in scalp mode, I would tend to believe that the market will be a little bit more volatile. It will tend to have larger pullbacks, and it may be a little bit more difficult to get to the profit objective. Knowing that, I will probably trade all in, all out on my trades. So, let's say we're back here to the hard edge, and you can see some of this starting to creep up. We're starting to get more sideways trading. We're starting to get some yellow bars creeping in here. The hawk, you can see lots of yellow bars clustering. So when I get a signal, I'll probably look to take it, and here's my number 2 signal. So I'll go all in, all out, not expecting too much more follow through. Now you can see, here's the exception that proves the rule, because we were in scalp mode and yet we had some very big follow through. But look at how often the market pulled back during each leg higher. That's kind of characteristic of scalp mode. So when I'm in scalp mode, I will usually consider all in, all out on target for my profit, and I will usually consider running as deep a stop as I can manage, because I'm thinking maybe the market is going to bounce around a little bit more. Likewise, when the market is in trend mode, that's the other extreme, I would anticipate greater follow through on the signals. So maybe I'll have a runner in play. I may be able to get by with a slightly tighter stop because the market's more likely to have greater follow through to it. Antonio asks, do you change any other settings when you're scalping? No, not really. Again, it's a tool, right? So it's trying to tell me that right now, see, we're actually moving from scalp mode to trend mode. So I would anticipate the market to become a little bit more fluid, the pullbacks to become less pronounced. It's just trying to give me a heads up of when the market may be acting erratically, and I would respond accordingly. And we're still in scalp mode for the better part of 15 minutes here. So now I'm getting perhaps, well, here already the Falcon has produced a buy signal, as has the Hawk, waiting on the Raptor now to complete the number one signal. So the cloud's crossing over. So Geiger counter is bullish. We've got a green warning dot. I'm getting ready, looking for a possible buying opportunity. Okay, come on. Are you going to go higher or not? There we go. So here's now the number one signal. And okay, so now we are moving from scalp mode into trend mode. So maybe I will try to stretch this trade out a little bit. So we'll take it back up here. We're above the high of the morning. Maybe I'll try to run it now to the next resistance zone, which is at 70.15. Providing, of course, we get a little giddy up here. And Mike, I'll get to your question here in just a moment. Okay, come on. Okay, thinking about it here. This is the remnant now of the scalp mode. You see, we're getting the exaggerated pullback. This is very characteristic of the market when it is in scalp mode. I'm going to give them a couple more ticks. right. Now, when I'm in scalp mode, I I try to be conservative with my stops anyhow, but more so in scalp mode. In trend mode, you can usually be a little bit more aggressive with your stops because, once again, you're not anticipating wild reversals against your position. You're expecting the market to have a little bit more follow through to it. And we're kind of looking for that right now. Come on, get up above those highs. 69.75, a bit of a stumbling block. I can see the market perhaps trying to make a run here to 7,000. That was Friday's high, I think, or very close to it. Well, looks like scalp mode is going to take us down to the wire here. As we continue in this rather sideways fashion. No, stinkers. I'm going to make a run now at the lows. This why I like to keep my stops 2 swings back. You can see they easily violated the first swing. They're probably going to tag me out here, but they're thinking about it. The better stop would even be below here, but honestly, I don't feel like giving them too much more. If they don't recover it at this point, then go ahead, take me out. Stinkers. Just can't get above this 69.75 region. I should have. Hindsight trading, still 2020. Should have waited for that second push opportunity. Talk about scalp mode, the market being erratic. A second push entry here would have kept me out of this signal. I still think I'm on the right side of the market. I just need them to convince themselves of that. Geiger counter's bullish again. Come on, you guys, let's go. Well, that's not good. Printing a number 1 signal to short. That usually develops in a new trend or as a new trend is trying to emerge. Okay, back now to the high of the morning. I could start to get more aggressive with my stops at this point. If the market fails again, then it's very likely going to reverse and head lower. So I could, at this stage, say enough is enough. If you're going to take me out, give me one more swing though. Come on, just one. Well, I'm not real happy about all this sideways trading. No, sir. All right, here we go. Oh, come on, you guys. No. Yeah. Well, you kind of figured that was going to happen. Every time they rallied up here, I didn't get the follow through. Oh well. Got a little excited on that one. Hopped in a little bit too early. Mike, thanks for being so patient here. Mike was asking one more thing. The OCO sets up just a stop entry, no stops or profit targets. But the buy, sell, the market buttons seem to set its own profit and stop. How or where do I control these? All right, so here's our OCO feature. If you, okay, I do believe if I dial this up to 100%, and let's just do a little OCO right here. So we're going to short below here. Remember, your OCO orders are live when you put them on your chart. So we'll just do this for demonstration purposes. Oh yeah, okay. My mistake. I thought the OCO did have a profit target if I went to 100%, but obviously it does not. So what you need to do in this case now is you need to manually set your profit target by right-clicking on your chart and selecting, in the case of a profit target for a long position, you're going to sell limit, right? And then what you'll do is you'll bring it down to where you want your profit target to be. And these orders, once they go live, of course, they're live. Your stop loss, you can do the same way. You can right-click and enter a stop loss order, or you can use the trade manager, and you can select your stop strategy and enable your stop loss, and then you will automatically get a stop loss. Yeah, thanks, Steve, for the pep talk here. Steve says not all trades are good trades. That is so true. That's a big lesson that a lot of traders never really get a handle on. Not all trades are good trades. Unfortunately, not all days are profitable days. I think I missed Steve's earlier comment. He said he didn't like to trade around the 10 o'clock mark because very often the market is erratic at that time. That's true. It does seem to go in half-hour spurts where the market will behave a little bit funky. Same is true at the bottom of the hour, and then again, very often at the top of the hour, just before they break for lunch. Well, I don't know now. You know, we've seen a lot of ranges. This is another one of these days where the market is moving higher and lower, but overall, we're really not going anywhere. If I take a look once again at the daily chart, here's today. What a neutral day. We're just kind of chopping about a little bit. Not really anything to show for it so far. All right. They are starting to leak a little bit lower. I think this is the first time this morning that all our tools have been in sync. We've got a bearish hawk, bearish falcon, bearish eagle, and now a bearish raptor. I missed the number 3 signal right here, but here's an opportunity for one of these discretionary signals, and it looks like they may even give me a little bit slow on that. May even give me a second push opportunity on it, or not. I think our trading band is getting a little bit broad. So we either have a very strong trend or the market may be open to a potential reversal. All right, well, kind of stuck here on my back foot again. We'll just have to wait. That's actually a pretty decent little leg lower. Oh, they're still slipping. I may have to try to get on board just off one of these follow-up signals. I much prefer to wait for a pullback. The problem is not the direction. Rather, the problem is where in the world am I going to cover this trade? So here we're getting another warning dot. So let's say the signal prints right around here somewhere. Where am I going to cover this trade? Well, ideally, I should cover it at least back here. But that's going to be a little bit out of reach. So I got to wait. Yeah, like Mark says, pretty decent move lower in general, and for the day, decent moves higher and lower, in spite of the market remaining relatively neutral. Yeah, here we go. Mark's watching the band counter and the Eagle bounce back trade. Let's see here. We'll demonstrate that right now. So what he's talking about is here the band counter. I don't have my band counter on the Eagle, but it's the same band. This is the Eagle band. So you can be on the alert here for a number 2 signal on your Raptor. We've got a 70 tick broad band. oops, here on the Eagle, we've got a bullish opportunity as the market may try to retrace. It's a little bit dicey, these counter trend trades, but when the band does become very extended, it does open up the possibility of a reversal. So here we go again, the band still hovering around 70 ticks. We are kind of making a little bit of a flatter bottom here, so we're going to be looking for the number 2 signal now to come about. We'll see if any bullishness comes into the market now. Come on, give me that number 2 signal. Where are you? There it is. There's the number 2. So we'll, oh, come on. We'll set it up. And it's the same idea as what we're doing here on the Eagle. Yeah, I like Mark's point here. He says, wait for the low retest. That's, I think that's important. So you got the little retest of the low. There's the number 2 signal. Target is the hard edge. Now with this kind of trade, I would probably tend to be a little bit more aggressive with my stops. Especially with the Eagle, we've got a little bit extra in play here anyhow. I'll bring my break even in. Okay, got the break even. Don't stop now. Oh, so close. I was probably a little bit quick with my stops there. But that's the idea anyways, is we're going to be looking for the market to try to retrace, get back here to the hard edge. I don't like giving counter trend trades that much room or too much room to wiggle out. Way to go, Mark. Mark says, I squeaked 18 ticks on 6 cars out of that trade. Well done. We're going to get a 2-3-2 type setup here if we produce another buy signal. So there might be a little bit more here to the upside. Oh, there it is. I'm just going to hop in now with my market order. So the 2-3-2, it just kind of confirms the counter trend signal, or hopefully confirms the counter trend signal. Oh, you guys. Oh, tagging me out again. Well, there you go. The evils of counter trend trading. They look so tempting and yet so difficult to do. Well, it's one of the perks of being a trading room moderator. I can show you these things. Oh, here they go again. They may not be finished yet. The market seemingly pretty well balanced here this morning between the buyers and sellers. We get a bearish move, and then we get a bullish move, and then we get a bearish move, and now it looks like we're going to get a bullish move. So unfortunately for me, the market making one more move lower before finally getting up there to its profit objective. We'll see now if this leads to a trend change or not. Still back and forth. Look at that. Well, what happened is they made the reverse back to the hard edge, and then the sellers took over again. Look at the follow through here. After they broke down here below these lows, you trapped a bunch of buyers out of their positions, and that caused the market to fall off rather quickly. All right, well, what do we think? Are the buyers going to step up here now? It's been a rather unusual kind of day today. Like I said, a lot of back and forth trading. We did have a little bit of a sideways trading range here. And we did get the breakout higher. Obviously, it did not stay. So now we're looking at the retest. We'll see if we get any follow through from the sellers back into the hard edge. See if we get a short signal. And here our tools are all mixed up again. So we got a bullish hawk and falcon, bearish eagle and raptor. I much prefer it when everything is in sync, but it's not working out that way right now. All right, back in the hard edge. Let's see if we get one more short. Okay, there it is. All right, so this is actually like an early number one signal or a hard edge bounce. It's kind of hard to describe. It is a discretionary signal. It's not printing as one of our high probability signals because, hey, our clouds are still here in a mess. But it really is just a decision time for me as I'm looking at this sideways range. I'm looking for the breakout. And now I need to decide, do I believe this to be the retest of the breakout? I know it's rather deep in here. In fact, it's gotten all the way back to the top end of the trading range. But that's only because it's such a narrow little trading range. Oh, I keep clicking the wrong things and deleting them. Okay, so they did not agree with that. We can delete that. And in fact, no, I'm not going to say they're getting too bullish yet, although they are starting to lean that way. Yeah, a good comment here. Mark says, I noticed that early on with the Eagle Cloud, when things got too far from the cloud and the late filter came into play, it was a confirmation to go large on that particular counter trend late filter entry. So just looking for some synchronicity between your trading tools, which is always helpful. Mark also says, but the large cloud gap by itself gives a lot of credence to a counter trend move for a nice scalp. Yeah, you know what? That's not a bad way to go when you're looking counter trend. Just go with a scalp target. Overall, though, my goodness, we've been rather sideways. Okay, here they go again. So I missed the number one signal that printed here. I've got now the discretionary signal. Oh, it's another number one signal, actually. I'll roll my stops back here a little bit. Yeah, of course, that was the number one to buy. This was the early number one here to short. Yeah, Mark says if 17 ticks is considered a scalp. Oh, they're not showing me any love here this morning. If the market breaks down, however, we do have some room to move. Looking here again at the daily, you can see today's range very tiny relative to what was going on for most of last week. Well, pretty much any day, except for a few days up here where things got very, very quiet. So it's not unusual to expect more out of this market. Certainly, I think if the market's going to hold these highs, there's a good chance they're going to try to test the lows. So this could be a fairly bearish day, maybe even see the market get down here to 6,800. I don't think that would be an unreasonable target. But right now, like I said, they are just back and forth all the time. Crazy kind of day right now. All right, gang, I'm going to get ready here to button up shop shortly. If you have any questions, please type away. Otherwise, if you're going to continue trading today, like I said, I think I would remain maybe slightly more bearish. The bulls are not giving it up though easy. You can see lots of back and forth. All right, everyone. I will see you again tomorrow. We'll talk to you then. Bye for now.